is Black Friday, Friday, November 24th. And if you didn't know, and this was actually a funny thing, if you had your family Thanksgiving, I hope you had a good Thanksgiving. But if you had a family Thanksgiving and you had a plumber, and if you ever have a plumber, stories are great. I mean, plumber stories are just fantastic. Understand that while most people consider this Black Friday, plumbers consider this Brown Friday. It's the busiest time of year and the busiest day for plumbers here in the U.S. Want to know why? I was nearly throwing up at some of the stories. It's just disgusting. I mean, it really, really is disgusting. I'm going to take a look at the Qs first. Okay, well, let's look at this first. Okay, this tweet blew my mind. And I'll include a link to it so you can see all of the things. But understand that Thanksgiving 20 years ago, these things didn't exist. Now, when you take a look at this list, understand this is investing 101. This is, while these things came out, they weren't huge. It wasn't a for certain thing. But understand, these things are how you invest. What are people using? What are people going to? What's the new cool thing that's going to make a company $1 billion? First thing 20 years ago, the iPhone. Second thing, Facebook wasn't around. YouTube wasn't around. Twitter or X, whichever, vase, orange. Instagram wasn't around. TikTok, Snapchat, Reddit, Gmail, WhatsApp, Bitcoin, Uber, Airbnb, Instacart, DoorDash, Netflix, streaming. Remember, they had a DVD service, but they moved to streaming a little bit later. Amazon Prime wasn't around. Amazon was around. It was a bookstore, and they had big ambitions. The Tesla Roadster wasn't around. Tesla wasn't even a company. iPad, Fitbit, Chrome, Zoom, FaceTime, and SpaceX. So those are things that weren't around 20 years ago. But understand, when the iPhone came out, it wasn't a for certain thing. When Facebook came out and they IPO'd at 40. I think it went down to 18 after their IPO. You lost 50%. But today, you're just over 300. YouTube wasn't around. Was it big? No, it was cat videos. I mean, if you want to watch a dog, pooping, that's what you went to YouTube for. But you saw the evolution of this thing. Twitter wasn't around. But, we invested in Twitter when it was a public company and it was trading at $25, $30. And Elon said, hey, I want to buy it for, I think he said $54 a share or something. It was some crazy price. We'll just buy it. And then it wound up happening. And by the way, the new chairman of the board of OpenAI, Brett Taylor, that's the dude who stuck it to Elon. 100%, that's the dude who stuck it to Elon and said, if you're going to buy, you have to buy Twitter and you have to pay this overpriced payment. And Elon tried to get out of it, didn't want it, blah, blah, blah. There was a lot of things. Uber's still in its infancy stage. So if you believe in Uber, it feels just as risky now as it did when it IPO'd. It IPO'd at $40. And you see it went down to 20. Will this be the next Meta that's up at 300? Who knows? Airbnb wasn't around. I'm still not a huge fan of Airbnb. Instacart, I think they're overpriced. DoorDash, I think it's overpriced. Netflix, I love Netflix. Netflix, when it was a streaming service, it was just a risk. So understand this list. What's the list going to be in 20 years from now? My guess, it's probably AI. But that was the first thing that I saw. And I saw that yesterday and I was like, I got to bring that up. Let's look at the Qs real quick. The Qs, if you see here, I posted this a couple of weeks ago where we saw this back in July. You saw it kind of top out here in July and pulled back, tried to push it again, but that created a resistance level. We've broken that resistance level. It's about 388. So in my mind, this creates the new support. Old resistance that gets broken creates a new support. You're 5.4% below your all-time highs. That's this top yellow line. So what do you want to do? You want to create, if you're in TQQQ, I've said it, and I think I said it Wednesday. or maybe I said it Monday when the last podcast that I did. I think I did a podcast on Wednesday night. I was thinking of selling TQQQ. I haven't sold it. The stop loss that I have is 388 because we've broken above it. So why give away any kind of go forward? We're at 390 right now on QQQQ. TQQQ, I've just set up this kind of chart on TQQQ, and that's where I put it. So I don't have to think about it today. It's a Friday. It's a half day. If it sells, it sells. I can always buy it back Monday. Understand that's a trade. Later in this episode, I'm going to go over rules of buying that I have, rules of managing your portfolio, rules that I think are super important that I always bring up. And I'm going to go over those rules just so you have them in your mind. So as we get into later this year and you start the new year, you can understand these are the things, the ways that I manage things. Might not work for you, but as long as you have a plan, that's the key. So QQQ, I think we're still in a bull market. I don't want to say that we're getting out of this bull market just because there's too many good things. First weekly MACD cross up to the upside in over a year for SPY and QQQ. This is from Trendspider. It's the first weekly MACD cross up. If you know my algorithm, it's based on a MACD strategy. MACD for me is the key indicator for me to look at. Well, Trendspider saying it's the first MACD cross up in over a year. We're to the upside. So I agree with the chart. I agree with everything. I'm still bullish. Here is an article on the 10 best stocks for when the 10-year treasury starts falling. The 10-year treasury, let's go over to Seeking Alpha and let's look at the 10-year treasury. They usually have it. If we want to look at market data, and we go to U.S. bonds, and you go to the 10-year, they have the 20-year right here. So the 20-year right now is at, oh, it doesn't tell me. Let's look at the 10-year. We'll just type in 10-year. 10-year U.S. Treasury. There we go. 4.48. Got up here to about 5%. I think it hit about 5% back in October when the market wasn't doing well. You can see when November came, it just crashed. That's why stocks are going up. The 10-year is absolutely controlling this. This is an article that has the best stocks for when the 10-year starts falling. Microsoft, Adobe, S&P, Global, SPGI, Blackstone, Prologis, Intuitive Surgical. You can put these into whatever charting program you have. Understand these are good stocks. Understand do not trust a douche on the internet. Kim Khan is a Seeking Alpha news editor. You can't trust it. You have to make your own decisions. But it's a great article to take and look at some things if you want to look at opportunities to buy. Now, if you want to look at, I don't know how to trade, and you want some opportunities to look at some different things, here's some indicators from Trendspider. And these are YouTube videos where you can use. Doesn't have to be in Trendspider. They basically teach you about RSI. They teach you about EMAs versus SMAs. They teach you about this is proprietary to Trendspider, the TTM squeeze, and trading with Bollinger Bands. These are all things on their YouTube channel that they teach you. So go over to the Trendspider YouTube page, subscribe to it. Subscribe to their Twitter feed. It is a great, great resource. Understand that you need these resources. Even if you don't subscribe to Trendspider, you should have a charting program where you can use these things to try and some of those indicators, like the RSI, like the SMAs. I use both SMA and EMA. And we'll talk about it. Here's the Black Friday offer. And I've got this just for my subscribers right now. Trendspider is up to 82% off. The sweet spot is this elite level. And I say you can do the great thing about their Black Friday sale, it's only for today. It ends today. But the great thing is you can take a monthly trial. And the monthly goes from $79 a month down to $69 a month. I don't know why you do that, but it includes a 7-day free trial. Elite, if you go to yearly, and again, Elite is probably what most people want. It goes from $79 to $33 a month. The thing is, you do pay for a year up front. It's $397. But even this comes with a 7-day free trial. The sweet spot for me, if you're listening to me and you want a charting program, it's this $296, $24 a month. That is a crazy, crazy good deal. It includes everything that you see me use. I'll include my 4-hour algorithm, 65-minute algorithm, links to import the watch lists and the scanners, everything that you see me do every morning. It's here on Trendspider. You guys know I had a $250 offer earlier this year that was exclusive to the podcast. If you sign up today for the Trendspider Black Friday sale, and you'll have to do it today because it ends today. But if you do it today, I will give you 6 months of my paid newsletter. That's a $40 value. So what that does is that brings you from $296 to a value of $256 because I will give you 6 months for free. The process is you go to my link tree, linktr.ee/daily stock pick, and you go to this top link. It's Trendspider Black Friday sale. You click on that link, and then once you sign up, you click on this mail link. And you email me from where you signed up, where you use this link. Once you do that, I will send you a welcome letter and I will add you to 6 months for free of the Daily Stock Pick free newsletter. The key point is that you get this paid newsletter and it's back from June. You get access to all the archives of everything that I've done. But the key point here as part of the Black Friday is I include everything that I have on my Trendspider screen, the moving averages, the Bollinger Bands, everything that I have on my screen. So if you want to set it up perfectly, just like you see me have it, this is the way to do it. I don't always say, hey, you should, follow somebody, but Trendspider is a little bit complicated of a charting program if you're new to charting. So the key point is if you're used to my system, it might start you out at a good starting point. If you just get Trendspider from the start, it's kind of a Herculean task to take it over. But that's the Black Friday deal on Trendspider. Sign up today, get the Elite, and then email me from where you signed up, and I'll give you 6 months free. This ends at midnight Central Time, so you have 15 hours. I will post this video, and I will post it in the newsletter. So if you're a paying subscriber to Trendspider, if you signed up and you want 6 months free in the past couple of days or, the past week, or you got the Black Friday sale and you want a few months, because I'm just doing this today, I'll give you a couple months. Just email me if you signed up over the past week or so, and I'll add you to a list of, couple months free on that. There's no credit card required. It's a comp subscription. So essentially, I just add your email addresses, even though there's a 7-day free trial always on the paid newsletter. This is just me giving you a comp, and I figured out a way to do it in the Substack settings. So this is a great offer. In my mind, this gets you set up for the new year, and it goes ahead and matches the $250 offer, which was the best offer we had for Trendspider. So remember, it ends. If you don't get that deal, you don't get the 6 months. I'm going to be fairly strict on this one because, again, I never meant to start a paid newsletter, but the people who pay for it, I do want to protect them. I just figured this is a good way to get you guys into some type of system. So now let's talk about my rules, and I'm going to just keep QQQ up here. Maybe we'll go over here to the market data so you can look at this. If you're not signed up for, let me go into this. Black Friday sale, 30% off your premium membership. This is normally 25%. I think it's $169. Somewhere in that neighborhood, you save an additional amount of money, but it's Seeking Alpha. I love Seeking Alpha. At the very least, you should go to my link tree right here and just click on this. And if you don't want the offer, sign up for free, because this key market data and news and analysis and home, Seeking Alpha has become part of my ritual. And part of the ritual is getting this email every day because I import my portfolio. And so for $160 a year, it really makes sense to just keep track of your portfolio. And that's what we're going to do is with these rules, we're going to go over this. If you're not into charts and you just want to casually look at stuff, this one right here, pre-market portfolio, this is the core portfolio from my core portfolio. It's 35 positions. So I get breaking news on everything. I get all of the analysis, which is from Seeking Alpha. I get all the related analysis. It's a great email for me to start my day so that I understand exactly what happens. The ratings, this is their quant rating system. And it goes, Disney went from strong buy to hold. Netflix went from buy to hold. Shopify went from buy to hold. And you can see all the ratings. If I just click on this, it will bring me over to the absolute core portfolio, and it has everything that I need to have. Seeking Analyst score, Seeking Alpha's analyst score. You can see the description there. Wall Street, quant score, valuation grade, growth grade. It gives me everything that I need. So again, take advantage of the Black Friday sales that are going on right now. Just go to my link tree, linktr.ee/daily stock pick, and you'll see those. Anything that, if you want to support the podcast, it's all right here. But let's go over here. I'll keep the key metrics up here so you can see them while I go over these rules. First rule. And I probably should put this up on the screen. I won't, but I'll put it up in the newsletter. So sign up for the free newsletter so you get these rules. First is the 40-40-20 portfolio. I haven't gone over this in a long time, but longtime listeners will remember 40% of my portfolio I just don't touch. I just don't touch it. It's there for, I'll check in on it maybe every year, but typically I just don't touch it. These are the grade 8. This is Apple. This is Amazon. This is Tesla. When I own Tesla, and Tesla's not really in there. I shouldn't say that. This is Google. I've owned for a long time. It is those top stocks. It's Nvidia. Nvidia's right in there right now. I've sold Nvidia in some of my retirement portfolio, but typically I just don't touch it. I mean, that's kind of where I'm going with Nvidia. The volatility, it's at 480 right now. And so, that's the 40%. The other 40% I'll check in every quarter, monthly or quarter. They're not necessarily trades. They're solid companies that I don't mind dollar cost averaging, but I'll check in on them every now and then. The 20% is absolutely trades. If I don't like it, I'll get out of it. This is Sedge. This is if you go over Savvy Trader, if you go to my link tree and you go to my Savvy Trader, this is the any of the trading portfolios that, the trading portfolio that I have. Anything in here, Palantir, great example. Example of Palantir. Let me just sign in. Palantir, I sold at 20. Let's see where Palantir is right now. It's part of the core portfolio. I just didn't want to own it. It ran up. It's at $19.50. I was getting mocked, absolutely mocked, for selling when the next day it was up 10%. It went to $21.55. I don't care. I sold at 20. It's now at $19.50. But the 20-20-40 portfolio is what I like to think about, and I identify when I get into trades. I identify what that symbol is. Is it part of the first 40%, the second 40%, or the third 20%? That leads us to rule number 2. Before entering a trade, identify both the top and the bottom of what you want. That means my typical for a trade or even an investment, before entering a trade, I first identify where is it? Is it in the first 40%, second 40%, or the third 20%? And before I enter, I say, let's just take Palantir. If I bought Palantir at 10 and I said, I want to risk 5% to make at least 10%. So 10% of $10 would go up to $11. 5% would take me down to about $9.50, I believe. So if it passes $9.50, I have to decide at that point, do I believe in this stock as a that it will go up to 11? Do I dollar cost average it and double down? Or do I just let it sit, or do I get out? Great example of this, absolute great example of this is PayPal. I'm still in PayPal, and I'm in PayPal for a while. And let's go over to Savvy Trader. We'll go to hold on one second. I got to get to the trading portfolio. Daily stock pick, and we'll go to the trading portfolio. PayPal is, I am down, let's see, we'll go to all. PayPal, I am down 17% at 56. Still believe in it, haven't added to it, don't want to add to it. I've got a great position in it, a very large position. I'm down on that one. So, PayPal, I just believe in the long term. I think they're going to change some things around, but that's the second rule. And you can see PayPal in my mind has just, it's just gone down. Target, I took out of the core portfolio. Sedge, I got myself out of it completely. But you have to identify that so that you can make decisions. So the third rule for what you're identifying as a long-term buy, identify how low you're willing to go and whether you buy more or just sell out. Great thing. Identify for Sedge, for instance, got down about 50% and I said, I'm out. I'm just out. I don't believe when they said, hey, we have a shortage of orders and they don't have demand. I was just out. Get me the hell out. So, Target, when it got down to my purchase price after 2 years of 111, I said, I got to take it out of the core portfolio. I'm going to start trimming this one. Started trimming. Started taking everything over 111. I started taking some profits on. Small, just it's in a retirement account, no tax events. So I managed that one poorly. So here's a fourth rule. Identify the total lot size for long-term trades and split that up into multiple days or multiple weeks in order to establish your full position. This is what I'm currently doing with NVIDIA. NVIDIA is a great example of this. I know I want more NVIDIA. I sold some just because I thought it was overextended. I probably shouldn't have sold it, but it was at 505 and 510. So you can see the earnings just kind of came back down. NVIDIA, in my mind, is putting in this range between 400 and 500. So start adding to it anywhere between 400 and 500. I'll probably add some today at 487. Not a horrible price in my mind. You just kind of add to it and you do it over a certain period of time. If you have a job and you just don't have time to always do stuff, set it up. There's automatic trading that you can do for certain price points. Set it up on that. Or you can do it over, a period of time. I always tell people, say you want $10,000 of Palantir in your portfolio, but you want to get that over a month. Well, set it up, every Monday you buy a certain amount. Don't worry about the price because, again, if you believe in the thesis long term, this is for long term, just buy it. If you're trading, it's a whole different story. Now, when we talk about buying, don't ever do a market order or chase an entry. That's essentially the next rule. Don't ever chase. Find your price. That's why I like using Trendspider. You can find the algorithm will give you a price. Take PanW, for instance. This 242 right here. I wanted to add more. Great price. Did I get it at 242? No, I think I bought it at 245. Somewhere around there. I added to it. It was touching the 200 day. I say it's right around the 200 day. I know this one bounces up. Perfectly happy. That's a great example. Don't do a chase and put it in and don't change it. Do not change it. I've had too many times I've chased a stock. Don't chase it. Another rule. Always do a weekly, monthly, and quarterly review of your entire portfolio and stocks where you create a plan for the next week, month, or quarter. I do this every weekend. So Saturday, I start out with Seeking Alpha. I look at my portfolio and I look at, I go into my Fidelity account. I look at where my stocks are, which ones I want to trade, which ones I want to do. And I come up with my plan for the next week, the next month, and the next quarter. This is about managing a portfolio. You have to have a plan. Altering that plan always comes up, but make sure that you alter the plan with facts. You don't alter the plan with something like Target. Let's take Target. And this is my fault. And this brings, the next one you're going to hear me say, it's not the next one, but one of them, journal your trades. Try not to make the mistake. So Target is a great example of you should not just say, hey, I think this one's going to go up. Management handled situations poor. We can take a look at this one, and I'll kind of change this. Let's go to a weekly so we can see exactly how bad it is. Management started just, not managing their business correctly. And that's where you've gone down to here. And you're still under the 200-day long term. Do you get back to that 170? I think you do. I think the consumer is strong. I've been trimming this one as I gotten over 111. Their last earnings, I stopped trimming. I might even add more. Doesn't mean that the management has changed, but my thesis has changed in that the valuation on this one is low. So make sure you're doing things with facts, not feelings. That's where Trendspider comes in. It takes emotions out of the trade. So I think it's yeah. Don't do things with I think it's going to rise. Finally, journal your trades. I mean, like I said, if you have a plan and you journal trades, you're less likely to make the same mistake twice if you journal things. Now, Savvy Trader is my journal of choice. I've started that back in June. I just found this tool. I used to do it just by writing things down. Writing things down helps your mind kind of understand stuff. Savvy Trader is actually a better tool for me. You can sign up for free. I don't charge to follow either portfolio. They have changed. Just be aware. This is a new service. And they've changed kind of their rules. You could follow as many people as you wanted before. Right now, you can only follow one. So I have two portfolios. So what a lot of people do is they cancel the subscription on one, then they rejoin the other one. But if you want to join their paid service, you can follow unlimited. I don't think it's worth following unlimited amount of people because again, you don't want to listen to a douche on the internet. So I just think, be careful of which tools you use. I will find another tool if Savvy Trader doesn't fit my needs. There's always tools out there that you can find. And it's kind of like, if you guys didn't know, I have a FIRE podcast too. And it's FIRE with Gary, I think is what it's called. Let's see. Let's go to Spotify and see if I can find it. Because I think I do follow it. Let me see if I've got it. Your library. How do I search on here? Let's see. I guess where's my podcast? There it is. Daily Stock Picks. It's out there. I'll include the link in the newsletter. But Mint.com announced that they're going away. I use Mint.com all the time. Now I got to find a new tool. It's a free tool. I won't bitch about it. It's great. Black Friday deals again. I'll put those in the newsletter. Let's talk about some scans. I'm going to do it's really, really overview of scans. Understand in my scans, a lot of levered ETFs on the downside came up as bullish with entry points. I don't believe it. I've gone over exactly why I think the market's going to go up. We have a MACD cross up on the weekly. I'm not buying into those short-term ETFs, the levered ETFs that are short the market. I'm just not buying into them. I'm not selling my QQQ. I've got that stop loss on QQQ. I'm not getting out. If a down day happens today, so be it. We'll hit some stop losses, but I'm not getting out. So understand, I'll include all of those levered ETFs in the newsletter. Part of the perfect world is that you have Trendspider, you have my newsletter, and you can essentially use the newsletter and go in and look at the charts yourself. So the paid newsletter, again, you set it up the way I have it set up. You'll see my screen exactly the way you see it. UNH, United Healthcare. There was a report that they are using AI to deny claims, which is an interesting one. Hasn't stopped the stock. The stock is kind of even at 543. It's not up or down in pre-market. 543 is your entrance point on UNH. Then the next one, Pepsi, PEP. This one is still in the core portfolio. I haven't taken it out. I've said 180 is the price that I like on this. I think you're heading back up to 180. This is a secondary cross up on the MACD. Remember, my algorithm is MACD based. If you want to buy this one at 169, just understand it's probably a long-term hold. But Pepsi has a cross up. One that I really like to go back to 10 is SoFi. SoFi is down 0.43 right now. It's at $6.91. That is the buy. It's trading at 687. Sorry, 687. But I think it's a solid company. They had an investors day. Brad Ferguson, the stock nerd, he does a great analysis. He's doubled down on it. I think it's a solid stock. Adobe, this one has just been a monster. This is in my personal watch list. This one got under the 200-day, went down to 301 back in October of last year. You've doubled your money. It's now at 624. Where did we get in October? We were down at the 520s. 504, we were October 2nd. 504, you're at 619 right now. Adobe just on fire. A favorite trade of recent times is VinFast Auto. This is the Korean automaker that was a SPAC that ran all the way from $10 up to $93 here in August. It was just a meteoric rise. It's come back down to $6. It's trading at $6.40. But if we go super short term and we look at this, just last week, this was at $5, $4. So it's a good trade. Entry point here. Just understand it. You probably want to trade this on a super short time frame. And if you sign up for Trendspider, you get the 65-minute algorithm. 65-minute algorithm on VinFast over 8 months makes you 371% return. Understand that's because it got you in on that run. Got you in on that huge run from $10 to $93. So over 8 months, you make 371%. If you just bought 8 months ago, you've lost 39% of your money. But VinFast Auto is a solid trade stock. You can make some money if you know how to trade that one. And finally, for scans, CL. This is Colgate-Palmolive. This is just a more bullish kind of move. It's got another MACD cross up here. The initial buys were down here around 68. You're trading at $77. 68. This is a huge consumer company and enormous. It doesn't move like this. So you've still got confirmation. You're up at $77 right now. I hope you have a good Black Friday. I hope everything goes well. I will be back on Monday with a normal episode, but understand this was just more of an educational episode. Again, if you sign up for Trendspider and you take advantage of this Black Friday offer, 6 months of my newsletter for free. You've just got to follow the steps that I say very carefully. Go to the link tree, click on that link, sign up. You'll get it for $296 for the year. Then what you do is you email me. You use this little email link right here, and it goes to dailystockpick3@gmail.com. When you email me, I will email you back the welcome letter for Trendspider. I will also add you to a 6-month comp on the paid newsletter. This will get you the ability to set up your Trendspider exactly like I have it. Typically, this would cost you $80 or $8 a month. It does come with a normal 7-day free trial. But the reason I am so tight with my newsletter is I do have a lot of paid newsletter subscribers, and I don't want them to think that they're getting short a deal. But if you signed up in the last couple of weeks for Trendspider on the Black Friday sale, make sure that you can email me, and I'll just make a deal for you there. So if you have any questions, hit me up. And then you've got the Black Friday deal on Seeking Alpha 2. This one, I think, goes through the end of next week. So if you have any questions, hit me up. Okay, take care. Bye. Every morning I wake up to the sound of the trading bell. My heart starts to pound.